The Taiwanese index too is up 0.9% this morning, but the rebound is coming in from the Nikkei.
I think we've made very, very good progress. Obviously, we've been in continuous touch with the RBI.
We've seen low growth, but we have not seen a minus 1.8 in a long time.
The 20-day moving averages, both on the Nifty and the Bank Nifty, are the important support levels now.
Just before the earnings season, Clearance has to upgrade the stock to an outperform from hold.
25,820 is where the Nifty is starting at, 25,850 now. The sensex is starting at about 84,425.
We won't draw first blood, but I mean, if there is a gunfight, we'll not go to it with a knife.
We are seeing very strong momentum in the market, and clearly this is on the back of some very good rainfall.
Mild cuts on the Nifty and the Sensex. The Nifty is below 25,800.
RBI has found that there is prudential guideline as well as practices which are actually, hurting the segment.
Slew of measures were announced late last evening by the market regulator.
So that recovery that we've seen on the mid-caps for sure. From the lows of the day, it has recovered, and now in the green.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Well, that is the day so far, and markets are biding time, I guess, for the F&O regulations from SEBI more than anything else.
We'll say for 1 hour to go for the midweek holiday.
I would say, well, looking forward to the holiday. It's like, this is like bracing for the...
That's bracing for impact. This is looking forward to the holiday, yeah.
So this is Closing Bell. We're coming to you from the CNBC-TV18 Motilal Oswal studios. As always, I'm Prashant. With me, my colleagues Surabhi and Rima here, and Nigel is joining us from the newsroom floor. Guys, hi, good afternoon.
Good afternoon.
Hi, afternoon. Very, very quiet, right?
Everyone is just biding time, as I said.
I think Nigel's smile tells me he's more than F&O. I think he's looking forward to the holiday. F&O also, but we'll deal with that when it comes. Nigel?
No, actually, I'm celebrating my son's birthday party tomorrow, so I'm very excited for that, actually. I'm going to be a good boy. It's not going to be a crazy party, but always good to have a midweek holiday, right? So looking forward to it. And India just beat Bangladesh, in a shortened test match. So quite excited. That just took place around 15 minutes ago. So pumped up. Hopefully the markets do a bit of a bounce in the last 60 minutes as well.
Absolutely. And but last, I think from the moment that we walked in 10 minutes back, we've actually seen a slight slide. Yeah. We're down about from being flat. We're down about 40 points or so. Absolutely flat. But now 50 down at almost at the day's low of 25,763. And as I said, we said this in the morning. We reported based on sources that F&O circular, in terms of curbs, restrictions, whatever you want to call it, after the draft proposals came through in the month of July. We don't know what of it will be in the final one when it comes out. Let's see. It's also, of course, a market holiday, so a bit quiet because of that. Bank Nifty flat. Small caps are doing better, the last I checked. 0.75% of the small cap index, and mid caps not doing very much. Advanced decline is positive, not in a very large way. And the IT services index, that is like a complete flip-flop. Down 1, up 1. Today it's up 0.98% on your screen now. So that'll be first off the block in terms of earnings. Don't correlate this to what earnings may look like because earnings, generally the indication is it's going to be slow and sluggish. Rima?
Indeed. We'll talk more about it. A lot of preview notes are also kicking in. But just a quick word on individual stocks which are moving around. On top of the chart, as Prashant pointed out, it's Tech Mahindra. So that's up 2.7, 2.8%. There is a CLSA upgrade. But outside of that, Infosys, Wipro also showcasing a gain of nearly 1%. M&M is higher. Kotak Mahindra Bank on the bank's plan to become one of the top 3 private sector profitable banks. So Kotak Mahindra Bank is up and about in trade. State Bank of India also up. On the way down, IndusInd Bank under pressure, Tata Motors, Asian Paints, ONGC, Titan, Bajaj Auto, HUL. So these are some of the stocks with notable losses. Tata Motors, September sales, by the way, out.
Yeah, CV sales down 23%. CVs has been a bit of a non-starter. Really, we haven't seen any bright sparks. Ashok Leyland sales were, I think, in line with numbers. Tata Motors, the CV side is still looking at a year-on-year drop. Domestic sales, I think, are also down 15%. So those are not the best of numbers from Tata Motors. If you just look at the immediate trends, and the stock is reacting quite sharply to that as we see. So that's a year-on-year drop that we're talking about, 15% in domestic sales. Speaking of drop, by the way, just look at what's happening to oil prices. There's a 2% dip that's coming through. I'm talking about global oil prices, and now Brent is quoting at 70. We saw big moves last week. Remember that huge move on some of the oil marketing and refining companies. Not seeing too much of that right now. HPCL is up about 1%. IOC is quite flat. Let's bring up BPCL. BPCL is actually down 1%. So not much, but yeah, that's pretty big. I mean, Brent is now down to 70, even as all the conflict rages on in West Asia. The whole worry is that perhaps China and US, one of the biggest consumers, they won't consume as much, and there's enough and more oil going around in the market. So that's something to keep an eye out on as well. The cuts on some of the gold financier stocks, they have actually deepened, and we highlighted that in the morning as well because of the kind of advisory, the nature of concerns that the Reserve Bank is raising. It's not directed at any particular company just yet, but they are watching the space very, very carefully, and the reactions are playing out on the stocks. IIFL Finance continues to be a bit of an outlier, still up about 1% or so. Relatively speaking, once again, Nigel, we're seeing some outperformance in the mid-cap side of the market again today.
Yeah, that's right, and portfolios will be feeling quite good because of that, right? And just one more factor, if you look at the markets, we're down 30-40 points. Normally, you'll have the VIX that should either be flattish or should be mildly higher. But the VIX as well has cooled off. And normally, the VIX cooling off with the markets down, it's normally not a sign of worry. You expect a bit of a bounce back. So we'll have to see how this plays out. We're down 50 points or thereabouts. In an ideal situation, the VIX should be a little bit higher, but that as well has cooled off. Maybe, in fact, it's a shortened week. Maybe the IVs are cooling off as well on both the sides. How do you position yourself though in the final hour of trade? Mitesh Thakkar is with us. Hi Mitesh, good afternoon, good to see you win. The Nifty Bank is holding its ground. It's got a drubbing in the last few sessions. It's down 1,500 points. That plays out the weekly expiry today along with the Nifty Financial Services Index. Your view on the Nifty Bank first.
So, Nigel, I think the Bank Nifty and the index both, they have some negative event in the sense that technically the hourly and the 2-hourly charts, the indicators are starting to cross down. And the Bank Nifty per se, I think, is at a very critical support level of around 52,700, 5800 zone. We did have an intraday low of 52,817. So I think if this level breaks, then I'll be slightly worried. Similarly, the Nifty is also, trading below 25,800, which is my pivot level, an important area. And below that, we could see some more decline. So the profit booking could be slightly more severe. Therefore, we are avoiding the index. A good way to trade the index would be if you have long positions, buy a put spread to hedge it out, or just totally avoid it and trade with stock-specific biases.
What about individual stocks, Mitesh? Anything that catches your attention?
I have one buy and one sell. I think on the buying side is Coforge. So I would recommend buying with a stop below 7,000 for targets of 73.50. And Muthoot Finance, it's given some kind of a breakdown. So sell there with a stop at about 1989 or 1990 and look for targets of 1880.
Okay. All right. Got that. Mitesh, thanks very much for joining in. We'll come back to you for some more ideas in a bit. Well, one of the key stories, of course, we've been tracking today is the monthly auto sales report card. We have Vinny joining in. Vinny, we just saw those Tata Motors numbers. They're not looking too great. But tell us about the overall performance. Who's hitting the mark and who's not?
So yes, among the four-wheelers, let's start with that since Tata Motors just came out with its numbers. So talking about M&M, the auto segment, that did quite well, above estimates. They managed to see a growth also of 16% on a year-on-year basis, month-on-month basis. Also, they managed to see a good growth. We also had Ashok Leyland as well as Eicher VECV, which reported their September sales numbers. They were in line with what the street was expecting. So Ashok Leyland, bit of a decline in terms of on a year-on-year basis, 5% decline, but month-on-month basis, they've managed to see a strong growth in terms of momentum. They've seen a 29% growth on a month-on-month basis, and VECV on a month-on-month basis also has seen a double-digit growth. So surely strong momentum seems to be picking up in all these companies. But Tata Motors, that's coming at a bit of a miss that we're seeing this time around. A large miss in terms of what we had versus the estimates. So what Tata Motors reported is 69,694 units. Total sales is what I'm talking about. And our expectations was that somewhere around 80,000. Now, the management also came in with a commentary saying that slow consumer demand as well as seasonal factors was something that impacted the sales of the company going in this month. But going forward, festive season is there, so they're expecting a pickup in demand. Let's move on, talk about the two-wheeler names. Bajaj Auto as well as TVS Motors, they managed to report good numbers, both above the estimates. Two-wheeler sales, mainly good monsoon is something that is supporting the sales, as well as festive demand is expected to see a bit of a pickup. We spoke to the management of Bajaj Auto earlier in the morning. They also said that they expect this growth to continue even in the month of October, as well as their EV side or the green portfolio that now accounts to 40% of their domestic revenue. So that's an interesting factor coming in there. TVS Motors also similar strong growth trends both on a year-on-year basis as well as on a month-on-month basis. Lastly, the tractor side, farm equipment. So M&M tractors, that also managed to see an inline number this time in September, while Escorts also managed to see a decent number. The trend coming in from both these companies is that the second half of FY25 for tractors and farm equipment is expected to be better.
First of all, I mean, we are seeing very strong momentum in the market, and clearly this is on the back of some very good rainfall. Of the 36 agri-climatic zones that we have in the country, 33 zones have got either normal or above normal rainfall. And even in terms of, if you see the state stratification, for only the states of Bihar and Punjab do we see little bit deficiency in the rainfall, but broadly all the agri states also have very good rainfall. In terms of revising the guidance, no, we will still maintain at 5% level because we want to see through the festive season and then maybe take a call at the end of Diwali. That would be our view. But most of the heavy lifting will happen in H2 of this year, and that would give us an overall 5% growth rate.
Steady improvement in Nigeria and also, of course, in exports. October to December is a slightly better period in Nigeria. And that contributes to a steady upward growth trajectory for exports as a whole. As we have been saying, that month on month, we expect to see about a 10% improvement in exports. That's what we've been clocking. And I think that hopefully should continue.
Okay, all right. So that was a bit of the management commentary that we picked up today. Deepak Chinoy from Capital Mind is joining in. Deepak, hi, good to have you on as always. So autos first, I actually want to talk to you about Tata Motors. Now, whoever has been riding the good times with a Bajaj Auto is probably not worried at all. Two-wheelers are doing well. The commentary is good. Now we're in festive season. But passenger vehicles, what is the sense? And Tata Motors, after being the best performer last year, stock has gone into a bit of a funk and then they'll go through a demerger. CVs are still not picking up. What would your advice be to someone who perhaps is owning it at higher levels or has been in the stock for a while?
So, of course, Surabhi, I can't give you advice. I can't give advice on a stock, but I think one of the things about Tata Motors is I haven't seen the worldwide numbers, the JLR sales. We haven't. I mean, I'm looking at the numbers, in fact, on the screen while you were talking about it. I think it seems to be an outlier in the sense of M&M numbers haven't been quite as bad, and maybe the CV numbers in Tata Motors are more indicative of the market because they have a larger share. But relatively speaking, that's a small part of its overall business. I would say, the stock itself is not. I mean, there's hardly been any momentum in it for a while. But it's one of the few things that if you look at, say, the revival in China that seems to be happening now, they're probably one of the only companies in India that might end up benefiting from that revival if things go well because of the JLR, kind of establishment that allows it to kind of benefit from a China rise. Beyond that, the numbers in India don't look very exciting. But to be fair, other than the two-wheelers, the numbers in India aren't very exciting. They're decent, but not very exciting overall in the passenger vehicles area. So perhaps it's going to take Diwali for some of that to change. And I thought, two-wheelers would come good with agricultural, with more rainfall and with the elections. And that seems to have happened, but four-wheelers haven't picked up really meaningfully.
Deepak, hi, afternoon. Wanted to get your thoughts in on IT, but before that, just putting out what some of the brokerages have said this morning when they come out with their Q2 expectations. So CLSA finds the risk reward unattractive after the 14% increase in Nifty IT in the quarter gone by, because we haven't seen any material changes to the EPS estimates. They say that expectations have run far beyond fundamentals after the recent steep rally. They haven't seen any broad-based pickup in discretionary demand, either on account of the Fed cuts or softening of the US bond yields. There is still macro uncertainty which prevails surrounding US elections and geopolitics, and therefore the risk reward is unattractive, especially after the 14-15% increase seen in the stock prices in the last one quarter. But Morgan Stanley, on the other hand, believes that even though there is no material improvement in the fundamentals, managements may continue to sound cautious. They believe that valuation multiples hold up in the early stages of a recovery cycle. Purely when it comes to Q2, their expectation is Q2 revenue growth will be similar to or better than Q1 in most of the companies. The BFS, that's Banking Financial Services recovery in the United States, continues to hold up. Hiring trends are improving, though near-term management commentary remains cautious. There is pushback from owning IT stocks because of the way stocks have performed in the last 3 months. Investor positioning is already overweight. Valuations are high. But according to them, the valuation multiples hold up in the early stages of a recovery cycle. So Deepak, come in on IT now and how the positioning is and what would you do?
This is interesting, Rima, because we're in a phase where the US is going to go through an election later this year. The outcome of that election is probably going to change a lot of metrics for at least some of the companies, whether it is in the healthcare industry or whether it is in a bunch of other, even BFSI to that extent. Though I think BFSI is more or less going to be more fixated about how the trajectory of interest rate cuts will be, which seems to still indicate another 50 basis cut towards the end of this year. And I feel here that any new contracts will only kind of be discussed after elections and after maybe another round of rate cuts, because the intensity of the rate cut has been much higher than perhaps you would have thought about earlier, simply because there are fears that the economy is slowing down. That perhaps pushes decision making to a little bit later when there's more certainty around post elections, how the government is going to take things. There are a number of other issues that, the US is of course the biggest market, but you see Europe, if you see Japan, you see most of the world, the kind of contractions that we are seeing worldwide. I do think there's going to be near-term stress, but to that extent, these companies are unlevered. They have available cash for acquisitions if it has to come to that, and there is an ability to take an increased market share when it comes to outsourcing, even through the AI route. Because once AI gets stabilized, you're still going to need people to do a bunch of the things that they say that AI can do, but somebody has to drive it eventually. So I think the next year or the year after that will probably be more defining for IT. This is probably a time to think of building positions. It may not be a great time for results this quarter.
Okay, all right. Deepak, I wanted your view on the gold finances. But first, let's get in Abhishek. Muthoot and Manappuram, they are under pressure as the RBI has found several irregular practices being followed by these financiers. Abhishek joins us to help us out with all of those details. Abhishek?
Well, RBI has, found some, selected supervisory entities wherein deficiencies are being noted by RBI. So a comprehensive review has been advised for all lenders in the gold financing space, and review and on-site examination was done by RBI for selected supervisory entities with respect to prudential guidelines as well as practices with regard to loan against ornaments as well as jewelry. So RBI RBI found some irregularities as mentioned, ahead. Shortcomings in use of third parties for sourcing and appraisal of loans, valuation of gold without the presence of customer which are being done, inadequate due diligence and lack of end use of monitoring of gold loans, also the fact that there is lack of transparency during auctioning of gold as and when the customer defaults, weakness in monitoring the LTV, that is loan to value, typically 65 to 75% is the loan to value, followed by lenders over here, and incorrect application of risk weights, etc. So we have Citi's note wherein they have given a detail with respect to gold financing forming a percentage of the overall portfolio. In terms of banks, Federal Bank is the highest at 12.2%, Bank of Baroda at 4.6%, RBL as well as SBI at around 3.5 to 3.8%. In terms of NBFCs, Muthoot Finance has about 82.5% of the portfolio in gold financing activities. When consider Manappuram, they have about 52.5%. IIFL Finance has a little more than 21%, and SBFC has about 16% of the portfolio in gold financing activity. Back to you.
All right, Abhishek, thanks a lot for that. Deepak, I wanted your view on these gold financiers. They've had a good run. You have the tailwind that you've seen in terms of higher gold prices. But this side of news flow, well, the street doesn't like it too much. What would you do?
Well, I think it's because of the news, Nigel. I think the things that they mention, and I know that this probably repeating it, but I'm just saying things like, for instance, I'm giving a large number of loans to the same PAN number. There's a differential application of risk weights, that you're not able to recover the value of gold in case of a default according to the weight when you measured the gold. So that means there's a lapse in the valuation process. These things are serious, and I think at some level has to be addressed, because gold loans are usually taken by relatively poorer sections of society. However, some parts, I would say, RBI may have been overzealous in, for instance, saying that the end use is not monitored. When a poor person comes to you and takes like a 20,000 or 30,000 rupee loan, how are you supposed to monitor the end use? Whether he buys pencils or medicines with it, does it really matter because he's given gold as collateral? I would say that is not really a little bit of an unfair kind of an ask in that context, but maybe there is something more specific in the directions that are given to specific players. But I would say in general that regardless of this warning, I don't think RBI is going to come back and say stop lending against gold, because it will affect the lowest strata of society in terms of economic strata, income earning strata. And then therefore, while these things are maybe temporary reactions, I still think there is a significant growth story ahead for gold-based secured loans, especially because RBI has come really hard on unsecured loans recently, and they don't want unsecured loans to grow meaningfully, at least for banks or NBFCs. So I would say, despite a reaction in the medium term, unless RBI changes its view on unsecured loans, I would say gold finances still have a reasonably good future. One thing you have to be careful about is IIFL Finance has just got its license to come back to gold loans. So they will muddy the market for some of the established players like Muthoot and Manappuram, who had been taking market share for them in the last 6 months.
All right, fair enough. So that's view on gold loans. Deepak, and thank you for joining us. By the way, I do hope you'll join us on Thursday morning, because we are expecting the final rules on SEBI's F&O measures should be out over the next, I think, 24 hours or so. So we'll see. I would love to get your thoughts. Thank you. Have a good holiday tomorrow, and speak to you soon. We'll take a break. We're back, and we'll have Pashupati Advani join in to talk more markets on the other side. Stay tuned. Welcome back. Pashupati Advani is now with us from Global Foray. Pashupati, good to have you with us here. Thanks for your time. Let's just start with the brief bit on the market itself, Pashupati, because lots of heated debate and discussion about whether, we are at a point where one is, of course, we're thoda thanda today, that's it, and maybe the market picks right back up when we return day after. But generally, for the last many weeks, lots of serious long-term investors, Pankaj Tibrewal, for example, was with us yesterday, been making the point that maybe, it's kind of too hot to handle, and you need a cooling off period. So just wanted your thoughts there, Pashupati. Add to that maybe in the next 24 hours, we'll have the SEBI rules on F&O curbs, which perhaps more than anything else, what it does is reduces market volumes, as a lot of exchanges are fearing. So just wanted your thoughts.
So one thing is very clear. If you hadn't noticed, there's an election in the US in November. And I think
I thought you were talking about our election next week. This week, sorry.
This week.
Which is state election, sorry.
No, so the big election, the Americans have always had this phobia of $3 gas at the pumps. So, definitely I don't see crude going up before the elections. So that is good for India, and I hope our oil companies and oil marketing companies are taking advantage of it to buy cheap crude, because if global crude is 70, imagine how cheap Russian crude will be. And I think that arbitrage is gone. But the answer is, please buy NYMEX and Brent crude as much as possible, so that, because we are still a huge importer. First of all, that's very good for our balance of payments. Second of all, we've also got this thing of on the flip side, exports, where exports are not doing as well. The IT thing, according to me, is slowing down. We are not going to be able to pivot as fast as AI is pivoting for us. So, our IT companies are basically going to lose some market share. And also with the issue with the visas and, difficulties in making people travel, I think that's also going to hurt that sector. So those two, the oil sector and the IT sector, are big sectors. The other sectors that are big, obviously, are the banks, the banking sector. In that, the private banks seem to be doing okay. The state-run banks are having some pressures, because I think that there's some pressure to, take some more loan loss, etc. And but hopefully, with rates coming down, their bond portfolios will go up, so they'll net be okay. But I think that the market therefore is worried. Plus, as you said, we're going to get some laws about SEBI and how they're going to restrict the number of players in futures. I mean, the reality is that retail has lost supposedly about $100 billion, and a lot of that has been taken out by FIIs. So basically, we're just giving our foreign exchange, and it's going from retail out. So I think the government wants to stop that. Now, if it means that we have a slight correction in the market, so be it, because I think in the longer term, it's better to not lose the money and have some of the smaller retail not be in this fracas. I mean, we're hearing all sorts of rumors, but let's see what happens. And then, of course, the other challenge is that the SEBI chairman is also under some pressure. So credibility, et cetera, in her case. So whether she's going to make the decision, whether she's going to be replaced, these are all sort of market buzzes. So those are my thoughts. And as a result of which the market is behaving, I would say, skittishly. And the other big challenge is that Japan looks like it's going to raise rates. The Japan carry trade, which was basically fueling all the liquidity globally, is disappearing really quickly. And that's also putting pressure on asset prices globally. Prashant?
Pashupati, hi, afternoon. You missed out on China to give us your thoughts on the kind of sizzling rally, stimulus fuel sizzling rally that we've seen. Today, of course, shut on account of Golden Week, today onwards. But till yesterday, so where do you stand on that, and how does it change things for India and investing in India?
So a friend of mine who's actually of Chinese extraction, but he's a portfolio manager outside based in Singapore, says that I have not increased my exposure to China. I'm very happy with my 2.5% exposure. He says, I really don't understand what's going on there. And, it is affecting us. But the reality is, when are they going to give us visas to travel? I mean, it's becoming almost impossible to go to China. And it's also equally impossible for them to come here. So I think that we've got other sort of sub-battles going on with China that's actually making us ignore China in a big way and benefit from the fact that money is coming from other countries to us rather than into China. Seema?
Pashupati, hi, Surabhi here. So yeah, there's so much going on, right? Oil is falling, and then China. By the way, there's a Eurozone inflation number that just played out for the first time in 3 years. Finally, the Eurozone inflation number is, I think, at 1.8%. It's fallen below the ECB's target. So with oil prices cooling off the way they are, I think inflation is no longer that big a concern. So there's a lot, I think, on the international arena, there's just a lot that we're dealing with right now. But that brings us back here home. We've seen a bit of a change in the texture of the market rally, right? Some of it came back to large caps. We started seeing some participation in financials. What would your advice be now till the end of the year, given that we have elections, we have central banks doing all kinds of things, and there's oil? What should the portfolio strategy or the stance be? What would you be doing, and where would you invest new money?
So I actually believe that one should be buying into oil companies on dips simply because I don't think this 65, 70 oil is going to stick around for too long. I think after November 4th, it'll jump up. So the chances, if you get a dip in oil, it's great. And now the oil companies are kind of merged with oil marketing companies. So I think that will also be there. I'm not seeing any lowering of prices at the pumps, which is a little bit disconcerting. And it actually means that that's good for the OMCs, because it means the OMCs are going to keep the money, keep the profit, and enjoy themselves. And so I think that's good. So that's kind of like a no-brainer. The other thing is that government is still pushing out infrastructure spend. So any company that's benefiting from that needs to be there, whether it's the raw material, which is cement and steel, or whether it's the actual infra companies. Those need to be bought, the ones that have businesses. Again, I would say buy on dips, because they're all, quote unquote, in world terminology, really, really overvalued. But again, this is a market where there's going to be some shifting, and there has been some shifting to FMCG, which has gone quiet. And also, I also like the pharma sector, which I didn't mention when I sent you my notes earlier today.
Hi, Mr. Advani. Good afternoon. Good to see you in. Since the world is in a bit of a tizzy on a flux, let's look inward. And one sector that's underperformed is cement. But as we know, second half of the year is better. You have got the timing right quite a few times in terms of cement. Now you have input costs that are down, prices hopefully move up, and demand as well catches up. And even yesterday and today, you're noticing that most of these cement counters, they're not rallying big time, but they're not falling. Even yesterday, they were in the green. What's your view? What's your approach to the cement space? And which stocks do you like? If you could share a couple of numbers with us.
No, so I think there is two things happening in cement. First of all, the demand is there. Infrastructure demand is there. We're at the end of the monsoons, at least in Western India. And, people are going to get back to business, back to finishing buildings, back to finishing roads. And I'll say this facetiously, back to filling potholes in Bombay. So I think that will happen reasonably quickly. And I think that's going to help the whole sector. I actually think that the sweet spot is mid-cap cement, because there's going to be even more consolidation. There's 4 or 5 players, and the Adani group is the biggest. The Birla group is also in the space. Dalmia Bharat is also there. So all the other players are getting marginalized, and I think will be bought because they're trading cheaper as a multiple compared to those 3 groups. So even if they do stock mergers, that's fine as well. So, I think that's where we're going to go. So the sweet spots are going to be into the second tier cement companies. And I don't know, exactly which. And again, we've got Adani selling down some of his cement stocks, which are going to FIIs. So I think that means that, there is some demand from FIIs for cement. And as a long-term play, you look at India, you look at cement, it's part of the growth story. So why not? So, I'm not particularly concerned. And as you are, Nigel, that it's hanging in there.
Okay. By the way, Orient Cement, the last I checked, was seeing a big move, but it's been beaten down quite a bit. It's back above the 300 rupee levels. There was that sort of, there was a quote-unquote deal stock, but of course no deal has materialized so far. And it sold off from 360, 370 levels all the way down under 300, back above it, 7.5%. And the other one is Policy Bazaar, which is jumping 6.5%. So again, from the recent high was 1970, and the recent low is 1550. So from 1550, it's back at about 1720. So we'll see if this sustains or not. But Nigel, I think you wanted to come in on Orient.
Yeah, not on Orient. Actually, Orient, I mean, risk reward seems to be favorable at around 280. You know, that's what's been happening over the recent past. It goes to 280, 285 and then sees a bit of a bounce. The other one I'm talking about is the structural steel tubes business that has come out just now. APL Apollo Tubes, they have delivered, I think, a double-digit 12% growth in terms of their volumes for the past quarter. You know, so that's quite good, and that's the largest player in the business, so that stock moves up. But the other one is JTL Industries. You know, plenty of promise out there. It's coming on a lower base. It has valuation comfort as well, and that stock has spiked up as well because on that small base, you know, they have grown by close to around 26% odd. So both these two stocks, in the last 30 minutes, both of them have come out with their quarterly sales numbers, and at least for now, both of them are rallying. But JTL has that valuation comfort. We'll have to see whether or not the promoter entity converts those warrants that they took at around 270 rupees. That's the biggest trigger for that particular counter. But we'll thank Mr. Advani for joining in and giving us his take on the markets as well as on a whole host of sectors. For the time being, we slip into that snappy break, come back. Nimesh is waiting for us on the other side. He'll tell us what's going on in D-Street Chatter. Welcome back. Well, flat as can be with a mild negative bias is what we are seeing, but your portfolio is feeling good because the Midcap index is now up more than 200 points. Good time to get in Nimesh to tell us what he's picking up. Nimesh, truncated week, so happy. But what are you picking up in terms of flows and market action?
Well, flows-wise, it's going to be a muted day, right? Yeah. Because I understand a lot of domestic mutual funds are not very active. We have an off tomorrow. China is shut for this week. So even from a global perspective, you're not going to see this big global trade-off, which is going to happen. So from a flow perspective, it's quite muted. But again, it's been a range-bound day of trade. You rightly pointed out, portfolios are doing good. And that was the case yesterday as well. A vertical fall in Nifty yesterday, but the breadth was quite positive, right? Even that's been the trend today as well. I guess the sector of the day is clearly, again, metals. That's been the sector of the entire last series, and that momentum continues. And now we are seeing a bit of chase from the domestic and from larger HNIs as well into the metal names. So that's the sector which is well bid. I guess, what to watch out for. One, of course, once the China reopens next week, whether there is a global reallocation trade, that is something to watch out for. CNBC put out a note today morning saying there are few stocks in the large cap which are vulnerable to sell off if that trade has to happen, right? So that's something to track in terms of large cap. We saw yesterday was the first signs of it. 9,000 crores of selling was purely in back of risk of from India to China. So that's something to track. I guess earnings are going to be quite important, which will start maybe from next week. But I guess the other thing to track would be the geopolitical risk as to how that pans out. Despite so much of noise, the crude is now again fallen back to 70. So that's positive at the margin for India. So that is something to track. But I guess the bigger things to watch would be earnings. And if, as and when China reopens next week, whether there is a bit of a shift from India to China in terms of flows.
Okay, all right. So trade setup as well as all the cues that we need to track. But what about individual stocks, Nimesh?
Well, a lot of mid-cap stocks are buzzing in trade. The first name is Sadbhav Engineering. We don't talk too much about the stock. It's been kind of a forgotten stock. Suddenly, we've seen a bit of up move in that name. Again, locked at 5% upper circuit. The volumes are on the higher side. I understand a domestic mutual fund, the only institutional holder, that's been a seller of late. But some informed investors are buying as well into Sadbhav Engineering. The second name is SRF. Surprisingly, despite some long-only funds buying into the stock, this is the only name which is relatively underperformed in the chemical basket today. Darwin is buzzing in trade, so is Tata Chemicals. A lot of chemical stocks are buzzing, but SRF is under pressure. But there are buy flows and some long-only funds are active buyers there. The third name is SpiceJet. For second day running, big move on that name and on large volumes as well. Couple of reasons the stock is buzzing. One, I understand there is a clean-out trade from some hedge funds who bought into the QIP, and one of the PE investor who got warrants at a much lower price. Even that particular entity seems to have sold out. And in the last couple of days, some large HNI investors have been active buyers, and hence a big up move in that name as well. They've got the money now. Execution is going to be the key to watch as far as SpiceJet is concerned. And the last is a couple of large cap names where there is delivery-based selling, Sun Pharma and TCS. TCS stands out because while the entire IT has done well today, TCS is seeing a lot of delivery-based selling, and same is the case with Sun Pharma as well.
Thank you very much for that interesting list as always. Mitesh is now back with us for a few BTST calls. Mitesh?
Yeah. So Polycab is a BTST. Keep a stop below 72.90 and a target of 73.60 for tomorrow can be looked at. I think that's one. And the other one which I have on my list is Navin Flooring. That's on the stock, and I think we're just talking about the chemical pack. I think the chemical pack, this is doing very well as well. So Navin Flooring is a BTST with a stop at 35.85 for targets of 36.70.
All right. Thanks very much, Mitesh, for that. Mitesh, just a quick word on PB Fintech, if you will, if you want to weigh in. Is there a trade here?
See, I think, the stock, if you look at the last few weeks, has rallied and now is giving a pullback. It's coming closer to support level, so I would want to buy it. Last week, the low was 15.45 and the level which I was looking at around 15.20, so it didn't touch those levels. But I think in case you get it closer to 15.50, 15.60 zone, I think that's the level to accumulate for a medium-term perspective.
The other one is Angel One. Look at Angel One. It was up, and I was wondering in the morning, it was up 8% even a couple of hours into today's session, and has basically given up all those gains. And I was looking at people were saying, well, looking at the price, maybe what's coming in terms of those F&O rules, etc., is not going to be as Harsh, but probably reading too much into the price action, as clearly what we're seeing now is a big drop-off, and it is actually now just up about 1.5% or so. So it's a big one from the day's highest point, and that's the F&O name, by the way. Now, Nalco is surging in trade, and this is on the back of positive commentary from Kotak, I think, which has upgraded their rating on the name. Nigel, take it away.
Well, that's right. Kotak has done a bit of a U-turn. They had a sell rating, now they have a buy rating. They've increased their target price as well from around 160 to around 235 odd. Normally, when the price goes up, there are a couple of factors that play out. Yes, they increased their earnings estimates for the next few years, 25, 26, 27. And also, they're giving it a higher multiple. So both the levers are in place, and that's why that price moves up. Let's run you through the top factors then. Why they're positive on the stock from here on. They have upgraded their estimates on both aluminium as well as alumina for the coming years, point number one. Point number two, they're taking note of the alumina deficit that we're seeing globally, which will support pricing from here on. So that's on the pricing aspect. Next, let's look at the cost aspect. And they started getting a higher amount of their coal from captive sources. FY24, we saw some part of it. FY25 will be even better, and FY26 even better from here on. So pricing's in order. Cost as well will get minimized. And the third factor is volume growth. That's something that's not coming about, right? But now, in fact, they have an expansion that's coming on stream. And Kotak is factoring in for the second half of FY27 that volumes will pick up from their expanded alumina capacity. So put all this together, Kotak is quite impressed with Nalco, and the bulls, they're grabbing that stock in today's trading session.
Thank you very much for that. And the market is very impressed with Kotak Mahindra Bank. In fact, that is the big CNBC-TV18 exclusive and one of the big newsmakers of the day when the MD and CEO of Kotak Mahindra Bank, Ashok Vaswani, said to CNBC-TV18 that growth and transformation of the bank is the mandate given to him. He also reiterated that the bank is regularly engaging with the RBI in an effort to lift the restrictions as soon as possible. Listen in.
Kotak is a great brand. Kotak is a great platform. There's no reason why Kotak shouldn't be within the top 3 private sector banks. And I'm talking not only of the bank, I'm talking about our subs. Where our subs are within the top 5, why we can't be within the top 3, or just full stop, be within the top 5, right? Growth and transforming for scale is exactly what this mandate is about. India has the best digital public infrastructure compared to any other place in the world. I've worked in every other place in the world. I've never seen anything like this, right? Now, obviously, that has led to the demand for digital services having gone up dramatically. And it's about the bank systems having to keep up pace with that. So we've been spending the last couple of months really focused on how we grow and make our systems foolproof. So we've taken this as an opportunity to really say how we'll really leapfrog and make our systems really resilient and relevant for the days to come. So I think we've made very, very good progress. Obviously, we've been in continuous touch with the RBI, sometimes even every week, updating them, getting their guidance, making sure we're on the right path. And I think we've made tremendous amounts of progress.
Welcome back. A bit of a pullback is what we're seeing towards the end of trade. The Nifty is almost moved back into the green. TCS is the one that's fighting back for the bulls. The IT pack on the whole. New entrant Trent as well is doing quite well. Infosys, that's a heavier weight as well. That's pulling back. But let's get a view on the markets from here on. And how about the chart shaping up? Well, Jay Bala from cashthekiosk.com joins in. Hi, Jay. You believe that the markets could be looking to correct a little bit, maybe to the election day lows? Is that something you're working with? And also, Reliance Industries' underperformance is something that's giving you more conviction. Explain that to us.
Yeah, that's right, Nigel. See, there are two possibilities for the markets at the moment. The momentum is saying that one more higher high is, it can accommodate one more higher high. But whereas the time cycles that started from the March 2023 low, it says the high the market saw on the 27th of September, that could be a start of a significant correction. The bull market isn't ending, but it could be a deep correction that corrects the move that started from March 2023. But still, we are not yet fully convinced. We are waiting for the support levels for the Nifty at about 25,333 to 25,285 to get taken out before we are fully convinced. If you look at the US markets, it's probably even that's got on the a squiggle high to come through, and we'll see the sustainability of that. But we just want to be a little more cautious. You just want to start tidying up your portfolio at this point of time. Maybe start raising cash and careful with your new longs at this point of time.
Jay, hi, afternoon. Do you just want to expand on that? Because I think you did mention that the move could look at the post-election lows again. So I'm not sure, because the June 4 low was 21,880 thereabouts. So are you saying that could also be on the table, or what are the immediate next levels for the Nifty on the downside to watch?
Yeah, fair enough, truly. Yeah, that's the level I'm looking at. But we just don't want to preempt the market. We want the markets to first trade below 25,333 and 25,285, and then only then we'll start considering this. But this is just a heads up for the market and the market players that once that gets taken out, we might want to start looking at the June 4th low. But as the price structure is saying that there could be one more higher high coming through above the 26,244 or unchanged that we saw a couple of days ago. But the time is resisting it, and the underperformance of Reliance, like I pointed out, Nigel, I ran my Python code for from 2000, and the 2021 top, the 2015 top, the 2010 top, and 2004 top, they've all presaged with Reliance Industries lagging behind when the Nifty is clocking fresh 52-week highs. So this is just a signal at the point of time. It's not yet fully a committed signal. We want the markets to trade below supports, and intermediate levels before 21,280 is about first 25,300 and change, and then it's 22,600 and change.
Reliance is still about 9% away from its recent highs, when the frontline indices are pretty much knocking on those doors. But tell us a little bit more about Reliance Industries, because you're saying the underperformance of Reliance Industries is a signal that a correction is coming. So what's the chart telling you? How much lower does Reliance go? Is it going to be a long period of underperformance?
I would say it's a long period of underperformance. Yet the evidence don't point to that as of now. But it could be a significant correction. But if the markets were to drop below 2869 for Reliance, and it's already showing potential for about the June 4th low, that's about 2,700 and change. I pointed this out in August when I said Reliance has come down in 5 steps. Usually 5-step move is accompanied by another decline or a larger decline. So the nearest supports for Reliance are about 2,700, but I'm seeing this as a corrective move in a larger decline. Sorry, in the larger uptrend.
Just very quickly, we have 2 minutes before closing bell. Jay, the way commodities are moving, can't quite wrap my head around this. Oil has fallen 9-10% in September in 1 month. It's down some 16-17% in the quarter. Oil falling the way it is, gold rising, which is obviously a typical safe haven. Equities are also going up. I mean, I don't know, does it add up? Have you seen such big divergent moves across these asset classes, commodities and equities, in the recent past?
It happens, Surbi, and it happened in 2008 too. But if you recall our conversation in April 2024, I'd said
coffee is likely to replicate the move of cocoa and likely to be the next coffee, likely to be next cocoa. And coffee has gone up 50% from the Robusta coffee. If you look at the US Arabica coffee, that's gone up 35%. And if you look at today's price action in the Indian market, it's saying, tea stocks are getting into action. And some of the tea stocks have very interesting breakouts. And probably the message from the markets is that maybe if coffee is expensive, we're looking for tea, or maybe tea is also going to get expensive. I don't know the message, but tea stocks look pretty interesting. And this kind of divergent move usually occurs near one of the ending portions of the move. So that's another reason for you to be cautious. And gold might be ready to also pull back depending on the strength in the dollar. Dollar is likely to rally somewhere close to 102. The USD JPY is likely to rally more, somewhere close to 151.
And oil very quickly, Brent, next target?
Oil, as I said, on the 20th of August, oil is headed towards $55 per barrel. But, the first, a break below the September low of 68, a small bounce, and that's below $75, and then it resume its move towards $55.
Okay, well, and absolutely, it's going to be great news for a big oil importer like India. But what it does sort of sentiment out there in terms of risk assets, etc. That's another thing. But that's also another conversation. Jay, stay with us. We're going to just wrap up things here because markets are closing. So large caps, nothing. So not very much, not to talk too much at all. Look at the change. 1.5 point change in the Nifty. That's the close. 6 point change on the Nifty Bank, which is a 53,000 index. So that's how flat today was. The IT index had started 0.8% higher. It ends 1.25% higher. So actually the move is come in the IT index, and maybe if you just look at the small cap index, which is also done well. It's outperformed what the other indices have done. 0.75% of the small cap index out there. I just want to put out 4 names which really were top of the leaderboard with volumes. One is Paytm, if you can just look at it. Paytm has surged to about 730 today. That's a big move, 6%, and backed by volumes. BSC, no letting off. I mean, actually, it came off a little bit, but still, I think it had about 5% on it. And there was, of course, PB Fintech, which surged as well, back above the 1,700 rupee levels. We were discussing this earlier. So throw in a K Fintech as well. That also surged quite a bit. These were, actually the top 4 leaders on the volume list there. In terms of what was up. So that's essentially the list. Otherwise, vibrant screen with small caps, lots and lots of small caps doing very, very well.
Okay, in terms of, the mid and small cap action, many of these chemical agro companies, Tata Chemicals, Navin Fluorine, Coromandel International, they did well. Outside of BSC, even the other brokerage-related companies, so brokerages, exchanges, market intermediaries, so whether it's KFin, Angel One came off from the session highs but still closed up in the green. IFL Securities up and about in trade. Jayashree Tea was a big mover, so that ended up with a gain of about 14%. Orient Cement stood out for the kind of price and volume action. And on the way down, you had cuts coming through on names like Industars, Vodafone Idea, very close to being a single-digit stock now. Jubilant Food, too, cracked about 3.5%. But we're going to wrap up on closing bell. Don't go anywhere. On the other side is Markets Forward. Stay tuned.